Hello and welcome back to the Geordie Pig Investor channel. Today we're going to have a look at the 3 best global exchange traded funds on the market right now that you can look to add into your portfolio. To start off with, I'm just going to go through what an exchange traded fund is, also known as an ETF. An exchange traded fund is a collection of investments such as stocks, bonds or commodities that are packaged together into one fund. This is then available to buy or sell on the stock exchange just like individual stocks. An ETF is very similar to a mutual fund, but they do have some differences. ETFs are a simple way to access investment markets and diversify your portfolio without the stress and thinking process you may need to go through when trying to select individual stocks. When buying an ETF, you are buying the portion of the fund's underlying portfolio. Most ETFs track an index. This is a group of securities that represent a specific sector or region. An example would be the FTSE 100, which is an index that tracks the 100 largest companies in the UK. Who should include ETFs in their investment portfolio? Well, an ETF can be a great investment for all long-term investors. Specifically, they're a great option for beginner investors because they won't require time, effort, and the experience needed to research individual stocks. It may also be cheaper to own an ETF rather than buying a diversified selection of individual stocks, and it is also usually cheaper when compared to owning a mutual fund. And you can trade an ETF throughout all exchange traded hours, unlike a mutual fund, which can only be traded once per day. This means that ETFs give you more flexibility, which certainly is only going to be a beneficial reason for most investors. What's the biggest risk to owning an ETF? Just like any investment, an ETF's greatest risk to an investor is being in the market. If the underlying index that an ETF tracks drops in value due to unfavorable market price movements, then your ETF will also likely drop in price. However, the likelihood is if you are invested in a good ETF as a long-term investor, then it is likely it will ride out these waves and it'll come good for you long-term, as shown by many ETFs since they entered the markets. As well as this, remember that owning individual stocks usually always carries much higher risks because you're banking on that one particular stock to perform well or bad, whereas an ETF has a collection of these stocks from all different sectors and is likely to not be as volatile. The first one we're going to have a look at today is the iShares MSCI World Index, ticker symbol SSAC. This ETF tracks large and mid-cap stocks from 23 developed and 27 emerging markets worldwide. It does this via the MSCI All Country World Index. It tracks a total of 1,702 individual stocks and its current price is £65.11. The fund was created in 2011, has an expense ratio of 0.2%. It doesn't have a dividend, so it doesn't have a yield or frequency there, and has a fund size of 10,765 million. The top 3 sectors within this ETF are industrial at 25.6%, technology at 18.3%, and financial at 16.2%. The top 3 holdings are Apple at 4.4%, Nvidia at 4.1%, and Microsoft at 3.9%. Over the last 5 years, this stock has returned over 70%, over the last 3 years returning 30%, and over the last year returning a whopping 18.4%. More recently, in the last 6 months from this chart, we can see they have actually performed very well and have returned over 4%. The next stock we're going to look into is the Vanguard FTSE All World High Dividend Yield ETF, ticker symbol VHYL. This ETF tracks high dividend global equities via the FTSE All World Dividend Index. It also tracks 1,837 different stocks. The current price for this ETF is £51.57. And it was launched in 2013, has an expense ratio of 0.29% with a dividend yield at 3.14%. It also pays that dividend out quarterly and has a fund size at 4,132 million. The top 3 sectors within this ETF are industrial at 24.4%, financial at 22.3%, and consumer at 5.9%. And the top 3 holdings are Broadcom at 2.4%, JP Morgan at 2%, and ExxonMobil Corp at 1.7%. We can see the vast difference between these 2 ETFs due to the fact that this one is very much more focused on the dividend yield, whereas the other one is more focused on capital appreciation within the ETF itself. Over the last 5 years, this stock has returned 13.3% over the last year, 26% over the last 3 years, and 45.9% over the last 5 years. Bear in mind that is the stock appreciation, alongside you will have received your dividend on top of that. Over the last 6 months, we can see that this stock has performed okay, being up 1%. So not performing quite as well as that first stock, but still in the positive. And if you're looking to have more of a dividend portfolio, this may be the stock for you. The third stock we're going to have a look at today is another Vanguard ETF. This one is the FTSE All World ETF, ticker symbol VWRL. This ETF tracks companies in 49 developed and emerging market countries worldwide via the FTSE All World Index. This tracks the most out of all of these three ETFs, tracking a whopping 3,642 individual stocks, and has a current share price at £101.11. Their fund was launched in 2012. They have an expense ratio at 0.22% and have a dividend yield at 1.56%. By looking at these, we can see this isn't in between the other two stocks. First one having no dividend yield, second one being on the slightly higher range at about 3%, this one being in between at about 1.56%. They also pay quarterly and have a fund size, the biggest out of the three ETFs, being 20,986 million. It's always good to have a very large fund size because you know that the ETF is then likely to never go bust and is being supported with a lot of money in the market. The top three sectors within this ETF are industrial at 24.7%, technology at 17.5%, and financial at 14.8%. With the top three holdings being Apple at 4.2%, Microsoft at 4.0%, and Nvidia at 3.6%. And this stock has returned a very handsome 18% over the last year, 29.1% over the last 3 years, and a whopping 70.4% over the last 5 years. Like I mentioned earlier, you can also add that dividend yield on top of all of those three numbers to come to your realized total gains within this ETF. Over the last 6 months, we can see on the graph, this has again performed in between the two, being up 1.76%. As always on this channel, I like to be as transparent as possible, and out of these three ETFs, this is the one that I currently own in my portfolio. It is my second largest ETF holding within the portfolio, and let me know what stocks you currently have in your portfolio right now. Do you own any ETFs in your portfolio? Or are you looking to add any ETFs into your portfolio in the near future? Let me know if you like the look of any of these ETFs I've shown you today, and if you're considering opening a position in these ETFs, or are they already in your portfolio currently? I hope you enjoyed. Please like and subscribe. This is the Geordie Pig Investor, over and out.